Hey guys, got another market update for you today. Of course, we're covering yesterday, Sunday the 5th of December. Obviously, the markets were closed, but crypto was open and we still had a fair bit of news going about. So we're going to look briefly at the crypto markets again, some fears that some people have surrounding Chinese stocks and even Southeast Asian stocks as well. And then we'll touch a little bit on Trump's SPAC and some predictions for 2022. So to kick us off, crypto continued to slide, but not by a huge amount, or at least not by as much as the day before. At the time of me making this video right now, Bitcoin's sitting at about $47,000, so about 2K down from yesterday, or about a 3% drop. Ethereum is sitting at about $4,000, so down a couple $100 or a 5% drop. As I said, this was a little slide, but it really wasn't a huge amount and was pretty much nothing compared to the day before. But as usual, altcoins have been more volatile and they've dropped more than Bitcoin or Ethereum. ADA is down 6% on the day, Sol is down 9% on the day, for example, and it's the same story across the board, really. The more volatile the coin, the bigger the drop. You look at some of the Doge-like coins, Doge, Shiba, and Floki, and they're all pretty much down 40% this month alone and 20% yesterday alone. Now you guys probably know this, but the crypto market tends to act mostly in unison, but with the more established coins being a little bit more stable, a little bit less volatile, while the less popular ones tend to have larger rises and falls, but pretty much everyone in the crypto space knows this. Again, this is all probably just investors getting a bit scared about the economic conditions that we'll see after tapering and rate rises, along with a little bit of fear surrounding the Omicron variant. It's getting really hard to deny the fact that crypto is a market correlated asset, a risk on asset, despite what a lot of Bitcoin maxis would like you to believe. Now in China, of course, DD is in the news again, and they're warning lots of people that there's more pain to come. Basically, a bunch of people have been saying that it's a good time to buy into the company, that the worst is over, and that the CCP are going to start being nice to the company, but that doesn't seem to be the case. DD dropped another 22% on Friday just before markets closed. After news, it would definitely be delisting in the US and moving to Hong Kong. Still, despite the announcement that they made, there's no real news of what's actually going to happen or any details to make it clear. No one knows what will happen to investors who bought at IPO or investors who bought after IPO. No one knows who will be left holding the bag or if DD are just going to run away and take money with them. There are a lot of fears around still of more strict regulatory action taken by the CCP against Chinese stocks, particularly tech stocks, because they're very wealthy and very powerful. And that has caused the Hang Seng Index to drop again, along with pretty much every foreign listed Chinese company as well. Most institutional investors and banks are finally waking up to the threat that is the CCP and their regulatory authorities, and Chinese stocks are looking less appealing to them as a result of that, causing their prices to slide. But of course, China's only problems aren't tech companies. There is of course more trouble with the real estate market that has emerged. So the real news is that Sunshine 100, a property developer in China of course, has missed another debt repayment of $180 million. They are again literally on the brink of bankruptcy. It's only a matter of time until they go bankrupt and they lose everything. They literally don't have the assets or income they need to pay their debts off. This can only end one way. Of course, the entire industry is like this, and Sunshine 100 is not the only example. There's Evergrande and Fantasia, Kaiser, Cynic, and a whole bunch more companies that are also defaulting on hundreds of billions of dollars of debt. Evergrande, the big one, the daddy that you've probably seen a lot in the news over the last few months, might actually be managing to restructure their debt as they finally admitted that they can't continue like this, that it's just unsustainable and there's no way out if they don't try to restructure. Now on this news, their stock dropped another 90% on top of the already huge hits they've taken this year, which suggests that investors aren't confident that this is going to come to fruition or aid the company in the long run. Now on this news, the Chinese regulators then came out and put out a bunch of statements basically saying that Evergrande isn't a problem, that the Chinese regulators are not happy about these statements made that make Evergrande seem like a problem, that it won't impact property prices or the industry in China at all, and that is of course all a lie. All of this real estate debt is either worthless right now, or if not, it soon will be, and that entire industry is going to take monumental hits over the course of 2022. Now, unfortunately, Southeast Asian stocks have been getting hit hard as well, again because of Omicron fears, but also because they're closely tied to the Chinese market. Their index is down about 4% over the last week, whereas European and US markets are down 2 or 3%, so they have been getting hit disproportionately hard. This is probably because they were hit hard on the Delta news as well. They dropped 7% months ago when that happened, and their economies and their growth was slowed by the virus a large amount as well. Of course, as they're also tied heavily to Chinese industry and Chinese trade, then they're going to be seeing slower growth in the future as China enters a recessionary period, and they might even enter a bear market themselves, which would be a really big shame. This is without a doubt bad news for them in the short term, but I want to make this perfectly clear. A lot of people claim I'm a perma bear, but I'm not. I'm actually very bullish on emerging markets outside of China, and Southeast Asia is one of the regions that I'm most bullish on. They might struggle for a year or 2 years or maybe even 3, but in the long run, they will win out. Coming back to the US, Trump's media company is in the news again because it's going to be picking up $1 billion in funding from its merger with the SPAC, Digital World Acquisition Corp, and that's going to be really great for the company. That's a hell of a lot of money to put towards building a site, and they could do a lot with that. They could build a real platform, and they could actually grow it into a real social media site. It's going to have the benefit of having millions of users right off the bat. It's going to have a lot of hardcore fans that will follow Trump into the project purely because of who is behind it, who's the name. And something that's actually quite important, but I don't think most people are picking up on, is the fact that the user experience isn't going to be as important for Truth Social as something like Instagram or Twitter, because the demographic targets are going to be much older and much less technologically savvy, so they'll be willing to put up with a little bit rough around the edges platform. Without a doubt, this is something to watch for sure, but it has been so crazy volatile, and it's really going to remain crazy volatile for pretty much its entire existence, so I'm just going to sit on the sidelines and watch it and have some fun. I could see it become a legitimate target for shorts from people who dislike Trump or longs from people who love him. Maybe communities like Wall Street Bets get involved, but either way, this is far beyond my risk tolerance. I'm just going to watch and sit on the sidelines. Finally, we are nearing 2022, and so a lot of predictions for the next year are coming out, and I thought that I'd pick up some funny or interesting ones that you might like. So the first one I thought I'd show you guys is the inflation predictions consensus for 2022, and across the world, institutions are expecting inflation to peak in Q1 or Q2 of 2022 before slowing down, and by the end of the year, most banks are expecting inflation to be back down at 2 or 3%. Obviously, I'm a little bit skeptical. These are the same institutions that have got it wrong over the entirety of the last year, so we'll have to see how that turns out. Another prediction is that COVID variants will continue to pop up and cause fear and maybe a few flash crashes, but it's unlikely we'll see a return to 2022. Another prediction is that COVID variants will continue to pop up throughout 2022 and cause fear and maybe even little flash crashes, but it's unlikely we will see a return to 2020 and the lockdowns of that year. China is probably going to extend its decline, and international institutions, banks, finance, insurance companies, they're all starting to change their tune on China, and they're all getting a fair bit bearish. Now for the funny ones, Saxo Bank, a bank in Denmark that's pretty big in Europe, has come out with some pretty crazy predictions, and the first one is that they think Spotify is going to be disrupted by NFTs and music artists moving to take ownership of their work back, which is pretty bold and pretty unlikely, but it is technically possible. Another thing that they're predicting is that a female Wall Street Bets Reddit community is going to emerge and attack sexist companies, maybe go long on companies that do well for feminism and maybe go short on companies that don't. Again, that's pretty unlikely, but it is technically possible. We'll see if that comes to fruition. And finally, Saxo Bank think that in the US, inflation could rise as high as 15%. To be perfectly honest, I really hope not. That would be absolutely terrifying. And I actually don't think it will get that bad, because if we see 12% inflation, rates are going to shoot up and that should slow everything down. But again, this is still possible. At least Saxo Bank are thinking outside of the box and not just following the rest of the crowd. That's it for today, guys. I hope you enjoyed this video. If you did, then leave a like and a comment to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like private live streams, extra videos, and buy and sell alerts from my own personal portfolio. There's also a link in the description to masterworks.io, a site that allows you to buy fractional shares of art from world famous artists like Banksy, which can be a great way to diversify your portfolio with non-market correlated assets. There's also a link in the description to BLOCKFI, which will give you up to $250 in free Bitcoin when you use it. You can also get 9% interest on stablecoins like USDC, which is a far higher rate than you get from any savings account these days. Just make sure not to use Tether. Thank you all for the support. Thanks for watching. Stay stoic. Until next time.